The state of Nebraska has 24 ethanol plants, which combine to produce about 2 billion gallons of ethanol a year. In order to do so, they require more than 700 million bushels of grain. As a state, Nebraska ranks second in production to Iowa, which can produce over 3.5 million gallons of ethanol per year. But high corn prices are narrowing margins for the industry overall. We recently examined the status of Nebraska's ethanol plants with Dennis Conley and asked if there's reason to be concerned with the latest shutdowns.
Jeff, I don't think so. I mean, we're seeing normal seasonal patterns going on here, and we're seeing a little bit of a margin squeeze, but the numbers are that in Nebraska we have recently 7 out of 24 of the ethanol plants are shut down. Nationwide, the number is 36 out of 211.
You said there's a pattern. What do you mean by that?
Well, there's a seasonal pattern to these kinds of plants. Like in the petroleum industry, for example, refineries will shut down this time of year in order to do maintenance and upgrades and to get ready for the peak season in the summer. So the same thing happens with ethanol plants. They have to do some maintenance. The demand for gasoline at this time of the year in the U.S. is at its lowest level. I think people intuitively understand that the summer driving season, June, July, is when it's at its peak. This is when it's at its lowest. So the demand on these ethanol plants for the ethanol to go into the gasoline blend is at its lowest.
There's almost a rush on popular opinion, though. If one closes down, you wonder if there's going to be a rash of more, though, right?
That's right,
yeah.
Yes.
We had talked in October about how much impact DDGs had for ethanol plants across Nebraska, how much money they were making there, and that was kind of offsetting some of the cost of ethanol. As you go back and look at some of the past years and now into 2012 and 2013, describe to me how important DDGs are.
We're finding DDGs are increasingly important. You're right, when we go back 4 or 5 or 6 years, the DDGs were a byproduct that they were trying to get rid of at whatever price they could. Ethanol was the main co-product that came out of this. But recently, with the growth in the export market for DDGs and the adoption of DDGs for feeding livestock in the U.S., it is now becoming what we would call a co-product. Its value is somewhat equivalent to that of the ethanol. In some cases, when we look at the price of DDGs, it used to trade at a discount to corn, say 80% the price of corn. Now it's trading at the corn price or even a premium like 120%. So it's moved up in the rank of importance for an ethanol plant.
What about cost? Tell me about the cost and history of cost over the last few months and few years.
Yes. If we look at the variable costs for running an ethanol plant, and what we have here on this diagram is a proxy for what it would cost an ethanol plant. This is a 100 million gallon a year ethanol plant. That we see when we lay that on the gross margins, we still, I mean, the ethanol is still negative, but the distillers' grains still has somewhat of a positive net margin to go with it.
Your variable cost, is that a large part of that going to be your corn price?
Yes, corn price and you know, other costs of inputs like that. And then you have the fixed cost. And when we lay the fixed cost on there, that changes things quite a bit. Now, each ethanol plant has its own cost structure. You know, some have more fixed costs than others, but as a proxy, what we're showing here is that after we put that fixed cost on it, we see just a very small net margin coming from the distillers' grains, maybe about 10 cents a gallon through the 2012 year.
Yeah, we're looking through August. Do you expect the last 3 months of the year to be about the same as that, or last 4 months of the year to be about the same as what we saw previously?
I would expect it to be about the same. You know, we still have the higher prices for corn, you know, $7 a bushel. The seasonal demand for the gasoline is going down. So like we said, these plants aren't having to deliver the ethanol so much. So my guess is it's staying pretty much the same. Could
we see that mirror the same image in 2013 here until we at least get to planting and maybe see what corn acres are going to be, and bearing in mind that gas prices are forecasted to be down overall from what they were last year? Yes, no, exactly right. I mean, it hinges on, you know, what's going to happen with corn production in 2013. What's the acres planted? What's the yield? Is the moisture going to be there? All of those things. Are we going to have an adequate supply, or are we going to have another short supply? How will that affect the price of corn? Will it stay up around $7 or $8, or will it move back down to maybe 5 or 6? That all impacts the ethanol plant. And the other thing is the gasoline supply itself is in the long run is declining, and so the demand for ethanol to go in as a blend is going with that as well.